Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It's 4:10. I got to go quick. Lots of earnings after the close. We did enter today. A little tricky for me. Just goes to show you cannot lose your composure. You got to figure out how to actually either make money in bad overnights or salvage them, and figure out how to go forward. Because every now and then you get a little curveball. Okay, first things first, let's just go with the market. Go to the, the SPX. A lot of people trying to be concerned over whether or not the pullback today is a start of something bigger. At this point, yes. Was it engulfing? It did engulf these 2 days. Is it still above the 8 days? Is it still above all the moving averages? Yes. So are the bulls spoiled? Maybe a little bit. We could pull back to here and here and still be in the top third of this range from the 200-day that was 2 weeks ago. So we did kiss the highs here and backed off a bit. So we'll see what happens next. At this point, first pretty much down day that they actually let close lower than we've seen in the past 6 sessions. So if you reduce some risk here, no big deal. On the bearish side, a lot of people are talking about how we made a lower high here versus the old high in the Russell. And yes, that's a little concerning, but not the end of the world. As far as the oil names, they've been in downtrends, and it's just that's what's been going on here, and that's been a problem probably from here, but the market hasn't really paid too much attention to that. Same thing for the GLD. The GLD broke that that big area as far as the most recent support, and gave you another leg lower for traders that were actually short, considering it's below all the moving averages. So let's get into some names. Okay, my problem spot was a few. First one was SHAK. SHAK was the name we did very well with when it came public. Shorted in the 90s, figured we could buy it back in the 50s, had a day up on Friday, and then yesterday I was in here, I'm like, oh, you know what, an S1 filing. Sometimes it's good because it gets the 4 million shares out of the way, so it scares the shorts. Sometimes it can't be absorbed. So anyway, you go to SHAK, SHAK wound up getting absorbed. So, if you were, got really scared and listened to everyone all over Twitter, you might have got out of it. Overall, it held well, closed well. If you're still in it, great. I salvaged it. Instead of selling it down 3, probably got out flattish to a little bit up. And, chances are if you were long this overnight, not a bad idea considering it absorbed, the filing. Now the question is, where are they going to actually place the stock? So all in all, a disaster averted. My next scenario was Google. Google has been strong, right? It had earnings and was worth a look. Google had an article in the Herd in the Street, a little cautious, was down 5. Okay, wound up holding above yesterday's low, went green, actually traded briefly above this, couldn't hold, but so now we'll see what's next. You go to the 5-minute chart to see, what happened here. Basically, in the first 30 minutes, okay, let's see if we can go to the 5-minute chart here so you could see it a little bit better. Let's go to the 3-minute chart. Okay, basically, this was your gap down. Okay, did not break the prior lows, went green, gave you a push higher, held, the 50% of the range, and made new highs and then failed to hold. So, I did buy a little bit of that dip, saying I'll buy it versus slow. I'm not going to get all worried and upset. And you had a nice move, and you could have made a lot of money in Google, especially if you weren't in it. At this point, still looks good, still looks best in breed, and we'll see what's next here with Google. We'll see, it would have been nice if it didn't break through that, so you had that as a point of reference. Now, it's going to be more of a zone. Netflix was our other focus. What would happen here? Would you get a red dog reversal around this 110, or would we test the gap? Push below 110, came back above it. There's your red dog reversal. Some guys got long 110.14. You could have put a stop in 109. What is that? 32. So about 80 cents, and it closed at 112.51. So gave you $2.50 to 90-cent risk, and now we'll see over time whether or not it can continue. This has been best in breed status, so not a bad look today. If you took it as a day trade, great. If you took a third overnight, okay, we'll see what happens next. We'll probably have more, from Apple there. Amazon, another upgrade, came in a little bit, held firm, but we'll revisit this on Wednesday after earnings. The stock has been unbelievable. We've been talking about this range. It broke higher. Hopefully you stayed in for a part of it. I think we only had this little 3-day move-ish, and it's gone higher than that. Facebook sold it yesterday, and then a lot of people were talking about 100, 100, 100, 100. I heard 100 times, so it turned into a better short on the open than a long. Okay, but obviously it didn't give you that much and came off, and here you are. I think I actually bought the dip in here on the VTF and made a little pocket money. Some guys shorted the open, especially when it traded through this, and now still very extended, still has a whole week to earnings, so you might want to be a little careful. let it build a little bit above this. Like every time it breaks a little bit, you get a few days. So just don't be in an overall crazy, crazy rush. As far as Twitter, I talked about that today on Twitter, and it seems to have wanted to wake up right around here, and then you had that rumor, and then all of a sudden held here, turned up today, closed near highs. Who knows? Maybe it's got a 25 billion market cap. Facebook's got 270. People think it's somewhat cheap. We'll see what happens. Maybe there's just a trade down here. We shall, we'll figure that out. As far as some of the banks, Citigroup, as I said, could be one of the stronger ones moving forward. Morgan Stanley, we went over the level today. It held the 8-day, absorbing this sell the news on earnings. So we'll see if that continues. Goldman Sachs is still in this range. Not leading the market, but not lagging the market. You would think if the S&P is going to resolve higher, this probably breaks above this to the upside. So, watch that close. Tesla was my other disaster. Okay, Tesla, I talked about, I think, 266, 267. It opened up. I bought a little bit when it traded through 270, 50, 271. Sold some, and then when it broke the 5-minute low, I didn't wait to 266. I'm just like, I'm out of this. I, licked my wounds, walked away. And at the same time, SHAK was working out, and Google was working out, and I was in Netflix, so I really didn't care too much. I wasn't gonna get overly enamored. And at this point, Tesla did close on its lows here, so not really giving you a signal to be long. So I salvaged that one for a loss, and not a fun one either. I was long it, I think, from this spot, and then had a leftover thinking it would break out the highs, and that happened there. The stock that I've said put in the drawer and you stick around, it looks great, looks awesome, okay, which it has, okay, gave many different buy prices. Here's when it broke the descending channel off of this small red dog reversal bottom. Here is when we put it on Twitter, gave you a really nice breakout trade setup, another setup, and then as a trader, if I didn't know this was MBLY, I would say here's your shooting star top. That's a signal that it might come in a little bit. So hopefully you sold some strength there. And for those looking to fade this thing, good luck to you. Here's the 8-day. It's hit the 21 days a few times, so it can pull in. I would love a pull in because I'd like to buy it. But at this point, technically, it looks like you should have trimmed it. If it's been in the drawer since here, fine. Because I sold mine early somewhere in this mess and haven't been in it since. So if it's going to be in the drawer and you say it's going to be in the drawer for the next year, then keep it there because you might sell today, could come in, make new highs, and then you never get back involved. And then how'd you do? As far as GPRO, came out with numbers. It was up $2 and then sold off. I have no real opinion here except for it came a long way, and lots of shorts are trying to keep this down. We'll see how it opens up tomorrow. AMBA, we talked about selling the open, and wound up being a better sell in the open than a buy, and need some time too. And then lastly, I got to get out there for Apple. Okay, Apple has been in this range for 6 months. I only have a small call spread because, I don't really have much conviction up here. I think the numbers are going to be good. I think iPhone, the watch is going to be decent. I just don't know if it's going to be able to do another gap up after earnings like it's done so many times. So I took a small call spread, very small. Bought the 132, sold the 137s. I think I paid $3, took $1 in. That's $2. If it goes over 137 on a halt, that's $5 for $2. That's $3. To me, that's 150%. We'll see. If it doesn't, comes into here, it'll be a 0. So right now, as I sit here, I don't think it's, what time is it? 4:20, okay. It's pricing in a $6 move. So either it's in line and not enough, and it comes into this 125-ish area, which I think you could probably buy the dip after hours, or iPhone sales are above 50 million units for watches, and others are over 4.5 or close to 5, and then you could be a buyer above this 133. And then the measured move, well, not the measured move, the implied move of 5% is 136. So we might be able to get a great after-hours trade, and that's what I'm focusing on. Sometimes they halt it, so I have a small call spread, but I didn't do a lot because look where it came from. But if it trades through this, great. If they bring it lower, maybe I'll try and buy the dip. And if there's not a trade there, I'll just move on, and then we'll see what's next as this channel either will be intact or get resolved. I'm hoping it gets resolved because it's a lot better trade for us. And with all that said, the leadership is definitely getting narrow. There's been divergences amongst sectors, divergences within sectors, but still the S&P is 1% off highs, and the NASDAQ made new highs yesterday. Banks still hang in there, and the bios are doing just fine. So either be in the strong groups to be long, or be in the weak groups to be short. Or be in the strong names and stay with them until they get super extended from the 8-day, and then take some off and sell it. And if you happen to sell early, big deal. you know, and just keep doing that until it doesn't work. And at this point, it's not an easy tape. It's never an easy tape. If it was an easy tape, everyone would be killing it, and you know, we'd have more traders in the office versus computers, but that's not the case. You know, but there are spots, there is movement, the ranges are bigger, and the market's been a little bit more forgiving both ways. So just stay focused, don't bug out. This morning I was on the boat reading the quotes on my ferry. I'm like, oh my goodness, I have 6 longs or so. 3 of them are the top movers on CNBC to the downside, but had a plan, had a process, traded out of 2 of them making money, salvaged another, traded other things on the game plan, and got out of today alive, so I live to play again tomorrow or trade again. I don't like the word play. We don't play. We use our process, we use calculated situations in order to make high probability decisions based on rules and discipline. And if you keep doing that, you can stay in the game. Have a good night. I'll talk tomorrow, and I'm sure we'll be talking on Twitter Sphere once we see some of those numbers in Apple. Bye-bye.